Good morning, this is Todd Horowitz from BubbaTrading.com, coming to you from the floor of the CME Group in Chicago, taking a look at this morning's equity picture. And a pretty wild night. We had the debate last night, and depending on what side of the aisle you sit on, that's who the winner was. But basically, a lot of action during the debate. However, I don't think it was related to the debate. I think that was more just action that the markets were looking for. Overall, we've seen a little bit of pressure the last couple of days, but we've got still just a big old range. I mean, it's 2120 in the S&P to 2190-ish, somewhere around there, and I don't see any particular reason that it's going to break out to the upside, nor that it's going to break out to the downside. I think that you continue to look at our level, which has been 2175 for the last, 3 or 4 months. That's been basically the higher end than the one poke to 2190. But at the end of the day, I think eventually you will see the markets give up. I think you'll see a breakdown. But again, it will not be an economic item that's coming out, because if we can survive everything that we've heard so far, and now you know that the banks are maybe possibly in trouble again, looking at Deutsche Bank, that just tells you that overall, the markets are still living off of the free money that's being set by the Fed, the low interest rates. So overall, until the footprints show up, until we get some volume, until we get some volatility, and we can actually break out of one of these ranges, either up or down, the market should continue to vacillate back and forth. Now again, you look at the oil market, had a little bit of a pop yesterday, now it's under pressure again. Oil should go down to 40 before it sees any type of a rally. Gold has had a nice move up, but I think gold looks like it's got one more little bit leg to the downside and looking for an opportunity to buy it. Overall, the bond market is signaling that rates may start to go higher here. Now, the Fed doesn't have to raise the rates. The bond market can do it on their own. And I think they're at a point in time now that they can actually start to push the Fed around a little bit. But we'll see how it plays out. The bottom line, looking for 2175. We get a rally to sell it. I think the markets go lower. But again, right here, you have to be more cautious and conservative and patient until we get a real track in which way we're going to go. That's the way I see it. This is Todd Bubba Horowitz from BubbaTrading.com, coming to you from the floor of the CME Group in Chicago.